It's 2026 and traders are still arguing about which strategy works. Price action, indicators, ICT, smart money concepts, Wyckoff, everyone's convinced their way is the only way. But the truth is, these methods don't compete. In this video, I'll show you how I combine them in 6 simple steps using a GBPUSD trade I took last week that returned a 1 to 3 risk reward. Welcome to Hyve Trading. Hit that like and subscribe if you're new. Now let's get straight into step 1. Okay, so the first thing we need to do is to determine the directional bias for the day. And this is generating context using simple price action. So right now I've got 4 hour loaded up on GBPUSD, and if we just zoom out, you can see that price has been in an uptrend here, very clean, very obvious. Now, the day I took this trade was on the 21st, and if we just draw a counter trend line, you can see that price had broken above this counter trend line on the 20th, and as price came back down to retest this trend line on the 21st, I was looking for some buying opportunities. But in order to do that, I need to get my levels of interest. And I do that by using volume profile and VWAP. And this takes us to the next step of this video. Now that we've got our directional bias, the next step is to determine our levels of interest. So what I'm going to do is to pull up the monthly VWAP. And right away, you can see how price was reacting from the previous month's VWAP. So you can see the first tap we had, price rejected nicely and price came back down again on the 15th with very heavy selling to the downside, which led to 3 days of consolidation before price decided to break this counter trend line as well as the current month's VWAP. So already, as price is coming back down, I know that whoever was buying right here, whoever was accumulating, is likely to support the market as price comes back down to that accumulation area where we saw sellers getting trapped. So as price came back down, not only do we have this 3 days of accumulation, which we're going to use to derive our other levels of interest, but you can see it was also testing this current month's lower VWAP band. And if you've seen my Market Trinity course, you know that these levels act as support and resistance. So if we just mark that up, this will give us our first level of interest for the day I took this trade. Now, to go back to this 3 days of consolidation at this prior month's VWAP, we need to use the volume profile to determine the value area of where the most volume was traded around this level, because we know when price revisits the value area level of these days, we know that some of these sellers who are trapped will most likely want to get out for break even. So this is where I use the volume profile. So as you can see on the volume profile, you can see this line going across. This is the prior month's VWAP where we see this 3 days of consolidation. And you can see we had value building around this level for 3 days, right? And if we just zoom in a little bit, you can see that heavy selling coming down, which is 72,000 lots that was traded on this day. If you compare that to the other previous days, you can see none of them came close to this 72,000 other than this 82,000 we saw here. But that was a couple of days before this very day. So we know that there's a buyer that was holding up price that caused this consolidation phase, which is also known as your Wyckoff accumulation phase, that led to price pushing up and breaking that counter trend line that we drew on the 4 hourly time frame. So what we need to do is to just basically combine these 3 days of consolidation to get the value area where majority of the volume was traded before the breakout. And right away, you can see that we have the value area high of this whole value area. And when price came back down on the 21st, you can see how we got that reaction. So this is how I was able to get an additional level of interest backed by volume, backed by data, knowing that when price comes down to this level, institutions, banks, and any other algos will be interested in trading at this level. Now that we've gotten our second level of interest, the next step is to go down from an intraday perspective to see if we could get any more levels of interest backed by volume. So if we just go back down to the intraday level, you can see this right here was the 21st. And straight away, you can see right here where we've got one of our levels of interest, you can see there's a stacked selling imbalance going right across. You can see the faint red line going across. This was sellers that got trapped on the 19th of January. This was 2 days prior to the day I took this trade. And what happened was we saw heavy selling coming down. Sellers got very aggressive at the VWAP band, the SD1, but they got trapped because price went against them. And all that aggression led to no result to the downside, which means a lot of these sellers are more than likely trapped. So they will most likely be acting as support when price comes back down because they will want to be getting out of their positions. So this was an added level of interest, an added confluence for me to look for buys around this level. And lastly, the final level of confluence was this VWAP right here from the 19th. As you can see, price never came back down to test it. And just like we had the monthly VWAP where price rejected from on the higher time frame, this can also act as support for when price revisits it. And as you can see, we had multiple levels of confluence that is backed by volume data, which tells us that if price should come back down to this level, more than likely, we should start seeing some buying interest from institutions. This leads us to the next step, which is to identify that there is in fact buying interest. And the way we do that is to look for selling Climax. Okay, so now that we've gotten our levels of interest, the next step is to determine whether buyers are in fact present in the market and if they are interested in getting involved at our levels of interest. And one way we can do that is by using cumulative volume delta. So if I just pull up the cumulative volume delta, you can see as price traded down into our levels of interest very aggressively, which is the selling Climax, because you can see that for a couple of bars consecutively, we had above average selling volume, right? So as price came in, we had climactic volume as price came into our levels of interest. And when you look at cumulative volume delta, as price was falling down, cumulative delta was rising. And you can see as soon as it hit our price, our levels of interest, cumulative delta started to pick up. And we had divergence between cumulative volume delta and price as price started to shift downwards. So you can see very aggressive buying coming in, which just showed that large institutions were accumulating positions from the sellers in order to then take price back up. But the reason why the selling Climax is so important is because it allows buyers to get involved without causing price to push away from them. So what we can do is to just mark up these aggressive selling. So the above average volume, we just need to highlight that from 9:30 to 9:48. And you can see straight away where the levels of interest are for these sellers. And the importance of this volume profile of marking up the selling Climax is when we get involved into our buy trade from our level of interest, we want to see where the next resistance point is. And as you can see, whoever got in here for buys were immediately rejected by these sellers from the value area low of this climactic action, which is why we need to mark this up, because we need to be able to determine where our take profit is, right? So you can see when buyers stepped in here, they got rejected by these aggressive sellers and price continued to trade down, even though there was still buyers stepping in and accumulating this market. But there's one sign that's a clear giveaway that price is about to turn around. And this is where we look for trapped traders, which is the next step of this trade breakdown. So the reason we look for trapped traders, in this case, trapped sellers, is because we want to confirm that sellers have completely exhausted all their efforts to the downside before we start getting involved in buy positions. Because for all we know, despite all the aggressive buying that was coming in, sellers could completely absorb all those buyers and start pushing price to the downside. This is why we need to make sure that sellers have completely exhausted all their efforts. Now, the tool that we use to do this, or the tool I use to do this, is the adaptive big trade. So if I just turn on the adaptive big trade indicator, straight away you can see a massive sell order right here. But what I like to do is to make sure that this is one of the largest orders for the day. So if I just zoom out, you can see when I zoom back in, and you can see this is the start of today, right? You can see that this was one of the biggest selling for the day. But pay attention to where this happened. If I just draw this line right here, you can see this took place at the low of the day. So the difference with this candle bar breaking below this low and all these other lows that were broken is that this actually shows us that there was, in fact, liquidity being provided from this massive sell order that came in. And the reason price turned around was that there was a passive buyer waiting to absorb all that selling. Once again, this buyer basically just confirmed that sellers were completely exhausted, because all that massive selling, but no result to the downside. So price completely pushed up. This is where we need to start looking for signs of strength to confirm that we should start looking for entries. And this takes us to the next step of this video. Now that we've confirmed that sellers have exhausted all their efforts, the next step is to look for signs of strength, because what this tells us is that buyers are now changing the overall direction of the market from bearish to bullish. And the first sign of strength that we can see right away from the chart after sellers got trapped is this massive bullish candle. If you're familiar with ICT, you know that this is a fair value gap. And essentially what this is telling us is that buyers have gotten so aggressive that price is starting to push very aggressive to the upside. And if you're familiar with the matching algorithm, what it does is when there's more buy orders than sell orders, it immediately pushes to the next point where it can find sell liquidity for those buying orders. This is the reason why large institutions like to buy when there's heavy selling coming into the market. This is the purpose of them getting in with selling Climax when it happens, because they're able to get their orders filled at a price that they want to get filled. So imagine if you're a buyer that wants to get filled at this level and price starts to push up because your orders are so large, it overwhelms the sell orders, which is why you've got the stacked imbalance right here. So this large candle with the stacked imbalance is the first sign of strength. Next, we can see that we had 4 consecutive volume above average. So just like we had the selling climax to the downside, now we've got the buying climax to the upside after sellers got trapped. So that was the next sign of strength. Following the buying climax, we see that price proceeds to break above the selling climax value area low. So remember, when buyers stepped in, as soon as price got to our level of interest, they failed to break past the value area low for the selling climax. But now, after sellers got trapped, we see that buyers successfully break above the value area low for the selling climax. But not only did it break above the value area low for the selling climax, it also broke above the VWAP standard deviation band, the lower standard deviation band for VWAP. We see that price broke above it, and this was a confirmed change of character. As you can see, when price was selling off, it literally traded away from the lower standard deviation band. But now what this means when price gets back above the lower standard deviation band is that the momentum to the downside is starting to dry up, and buyers are essentially taking over and changing the overall momentum of this market. So that was our final sign of strength. Now that we've seen the sign of strength at our level of interest, the next step is to get involved in this trade, which takes us to entries. So I'm going to show you the different opportunities that the market provided to get involved in this trade. I'll show you when I got into this trade, and I'll show you the other opportunities that was presented, not just on this day, but also the following day. So starting off, what we need to do is to mark up this area where we saw the trapped sellers. So what happened was, after we saw the trapped sellers, we saw the buying climax, which was one of our signs of strength. So if we just mark that up, you can see the 4 consecutive bars with above average volume. If we just mark that up real quick, like so, you can see that we had the value area low right here. We had the point of control and the value area high. So the value area for all this set buying climax was right here in alignment with where we saw the trapped sellers. So when market pushed up and started to trade back down, remember what we said about liquidity, right? Large institutions like to buy up into heavy volume, heavy selling volume. And as you can see, as price started to trade back down, first you can see the aggressive selling, you can see above average volume. Now take a look at this bar right here. Again, if you haven't watched my Market Trinity course, it's free. Check the link in the bio and watch it. It's only about an hour, 30 minutes long. And I go through all of this. This bar right here is one of the most important bars you can see on the chart. This is a VSA shakeout. So you can see the market opened right here. Well, this bar opened right here, and we had price trade all the way down with massive volume. This was sellers trading, getting aggressive, taking price down. But what they didn't see was this trapped seller who was most likely trying to get out right here. They didn't see the aggressive buyers right here. This is the importance of using order flow, right? Because you're able to see things like this and avoid being the sellers. So all this liquidity, right? If you look at this bar and we scroll to the left, other than this bar right here, which was a 7 o'clock news, a high impact news for GBPUSD, there was no other bar that had a high volume like this bar. And look what happened. Long wick with the bar closing above the open. This is buyers getting aggressive. All that selling volume was absolutely absorbed. And guess what? I was one of those buyers. So my entry was right here. I knew as soon as price started to close back, to go back above and trade back above, I knew these buyers were happy to take liquidity from sellers. So this is another thing I talk about in the Market Trinity course, I talk about liquidity givers and liquidity takers. So definitely check the course out. But anyway, my entry was right here before this candle even closed. But even if you didn't get in where I got in, you can see on the following bar right here, there was stacked imbalance right at the top of that candle. So you can see 35, 43, 17 buying, but look at the selling, 2, 9. There was no selling interest, very aggressive buyers. And that was another opportunity to get involved. So I got in 2 positions. My first position was a scalp. Basically, I knew these sellers were aggressive, so I took a nice quick scalp right here for 1-to-1, nothing major. And the second position, the goal was to take price above VWAP. So as soon as price got to this stacked selling imbalance, I moved my stops to break even around here. And you can see price didn't even come anywhere near it, and price continued to push up. So my risk to reward on this trade was about a 3-to-1. So I believe I got out somewhere around here as we began to push above VWAP for a nice 3-to-1 risk to reward. So that was my entry. But let's assume you missed out on these 2 opportunities right here to get involved. As soon as price hit the point of control in the value area high for this selling climax, alongside the daily VWAP, we see very heavy selling volume. So again, this is the reason why you don't want to ignore the selling climax, because these guys are likely to defend their positions. So you can see, look at the volume, identical to the shakeout, the VSA shakeout volume, and price traded back down. Now look where price came back down to. So this was the next opportunity to get involved in buys, right? So price came down to the lower VWAP band, which is now acting as support, and it came back down to the selling climax value area low, as well as this large candle, right? With the stacked imbalance, it came back to the high of that candle as well. So multiple confluences right here. And as you can see, after price rejected that level of confluence, the next bar, you can see stacked buy imbalance again. So buyers getting very aggressive, understanding that buyers have taken over this market. And shortly after, price continued to trade up. So let's assume you missed the opportunity to get involved on this day. Let's show you how powerful and effective these trapped areas can be. So if we just extend this zone right here, where we saw the passive buyer trapped the sellers, and we go to the next day, watch how accurate this is. Bang. As soon as price came in on this day, look, quick reaction, and price took off to the upside. To the upside. So if you're one of those guys that like to swing trade, you can use this to your advantage. For me, I like to get in and get out. And this is the advantage of combining all these different theories: price action, ICT, order flow. It doesn't matter. The most important thing is you're combining everything with volume data to get an overall view of the market, a better understanding of what the market is trying to tell you. And that wraps it for the 6 steps to profitable trading.